Most people consider trading as risky. They think if they get into the stock market, they are going to lose money. And their fear is not, unfounded. It is real that there is a lot of risk in the stock market. However, I have a different view to this. I believe while there is risk involved when you trade in shares, it is not risky. There is a difference between risk involved and being risky. Hello, my name is Sumit Gupta. I am a swing trading coach, trainer and author, and I have been trading in the stock market for more than 15 years. In this video, I am going to talk about what is the difference between risk and risky and how you can manage your risk in the stock market. There is a risk in every business. Every business that you would do has some risk involved in it, because you do not know what kind of risk that you are carrying. Then it becomes very difficult to manage it, right? So even if you are trading, let's say in general clothes or anything, the fashion can change. That also is a risk. People may not like what you are offering. That's also is a risk. People may not pay you for whatever services or the products that you have sold. They may not pay you. That's also a risk, right? So there are many risks which are involved in the business. Yet we do, and we do not consider business as risky. So why do we consider share market differently? Why do we think that share market is very risky? I'll tell you. See, what happens is when you are driving, there's risk involved in driving. People come in. You are on the road, you are driving, and even if you are following all the rules, what happens? Somebody might hit your car. Sometimes you might make a mistake. That also can happen, right? Sometimes the car might go faulty. So there is risk involved. However, do we consider that as risky? No, we do not. Why? Because we are following the rules. But just think about it that you do not follow the rules. You jump the red light, you jump a traffic signal, you drive rash, you drive zigzag, you drive at high speed, you do not check your car quite often, you do not get your car serviced. So what will happen? It will be risky, right? If you try to overtake people when there is no space available or very little space available, what will happen? It is risky, right? Similarly, when you take a flight, there is a risk involved in flight. However, what happens? Less than 0.1% of the flights have an accident. Why? Because the flight follows a route. It follows all the rules. But if they were not to follow the rules, what will happen? There could be a chaos and things can go haywire. It can happen. And that's everywhere. Wherever you do not follow the rules, it becomes risky. Similarly, when you get into the stock market or in the share market for the trading or even for investing, there's risk, and that risk can be managed. That risk can be reduced to a lot extent, and if you follow the rules. First of all, for following the rules, you have to know the rules, right? You have to know the rules. Now, when I meet a lot of traders, when I interact with them, a lot of them just get in as a rash driver, or they just get in without knowing the rules. They do not have any license, no information, no knowledge of the stock market, and they just jump in. Now what happens? They incur losses. They do not know, they just go on the tips which are given to them, right? They do not analyze, they do not understand what is stock. They do not minimize their risk. They put everything that is there on the, all of their capital into that, and that is why it becomes risky. So there's a lot of money that can be made from the stock market while you can limit your risk and while you can reduce your losses. That can happen. When it comes to managing risk in the stock market, there are three things that you must do. The first one which comes in is you should have a separate amount of capital kept aside for your trading. Okay. What people do is they just keep putting money into the stock market and then they keep taking it out. Always treat your share trading business as a business. Okay, like you put money in any business, just put some capital into that business and keep that aside. Never ever take out that money out of your share trading till the time you have an emergency, okay, and let this capital grow as much as it can. Now you would say why it becomes so, why is it related to risk management? Let me explain why keeping capital separate for your trading business is important and how it can help in managing risk. Now, whenever we are putting in money and taking it out for our day-to-day expenses or any requirements regularly from the trading, there are emotions involved. Now, how do emotions get involved? I may have some expense and I may be in a trade which might be going very well in my way, right? And I might have to close that position. Similarly, what may happen is sometimes it might be in a little loss, but still the stop loss may not have been hit and I may still have to close the position. So that is why it is critical and it is one of the tools of managing risk that you keep a capital separate for this. The second thing which I recommend is, as far as possible, do not use the borrowed capital for the trading. If you are using the borrowed capital for trading, that also becomes a challenge because you will be constantly under pressure to make profits, and that pressure will again lead to a lot of emotions, sometimes frustrations, sometimes irritation, and in case the trade is not going your way, you may not be able to hold that till the stop loss is hit. And if the profits are coming in, you will be forced to take profits early, which is not recommended. Now, why you do that? Because again, there are a lot of pressures that play. So, to manage risk, this is also important that you should not borrow capital. The third thing is that the capital that you invest in your trading business should not be all of it. Should never be all of it. Why? Just put in that kind of money which even if you lose completely, okay, even if you lose completely, it is not going to make a very significant impact on your life. Okay, it should not be a life or death situation. Okay. That's how you should start. That's how you should start. And once you learn the ropes of the trade, then you can increase it. That's perfectly fine, and your capital can grow. So when these three things you follow, what happens is that a lot of pressures and emotions remain under control. Okay, so this is the emotional part of the managing risk, which I have seen many traders whomever I interact with, they are forced and they throw all the risk management and the rules out of the window. And once you follow these three things religiously, you will be in a very good position. Okay. Then, when I come to the technique of managing risk, what I always recommend is never ever put more than 2 to 5% of your trading capital as a risk on one single trade. Now, what is a trade? A trade is a transaction which is of buying and selling. Okay. Never ever put more than 2 to 5% of your capital on risk. Okay. Now, what you are essentially doing is you are dividing your capital into 20 to 50 equal parts by doing that. So, even if you have 1 or 2 losing trades or 3 trades, you would always remember, you will always know in your subconscious mind that you still have a lot of overs left to play, a lot of capital with you, so that you can always take the next trade which can be profitable for you. Okay. And then what you have to do, how do you calculate your risk which you are putting on a share? Always have a stop loss in place. If you do not have a stop loss known, do not get into a trade. Now, what is a stop loss? The stop loss is basically the last swing low that you will take, okay, and once it is breached, that means the share is going further down. So you have to avoid that, right? And you exit with a loss. So these things, if you follow, the risk can be managed and you can trade profitably in the share market. I wish you all the best. If you like this video, please subscribe to my channel